What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we are going to be taking a look at the world's most valuable company, and that is Nvidia. See where shares are trading today and see if this is a good entry point for investors. All values that you'll see within this video are as of market close on April 17th, 2026. And as always, this video is not investment or financial advice and is solely for entertainment purposes. So let's dive right in here. You got the past 12-month price chart for Nvidia shares, and shareholders have had an amazing return over that time frame of nearly 99% over the past 12 months. And what's very incredible is that shares are still trading in a technical buy signal with the 50-day moving average trading above the 200-day moving average, that is the green line over the orange line, and shares are actually trading well above both moving averages, which both are indications of technical buy signals. And I just want to point your attention to the past 10-year price chart for Nvidia shareholders. Phenomenal returns of almost 22,000%. That is incredible just to be saying out loud. And even on that 10-year time frame, going back to 2016, shares are actually still trading in a technical buy signal with both 50-day moving average trading above the 200-day moving average, and shares on a long-term basis still trading above both moving averages. And let me note, significantly above both moving averages, which is still a strong long-term buy signal. A few key items here I want to point your attention to. There are 54 analysts that cover Nvidia. They each have a target price, or should I say, on average, have a target price of $269.82, which does imply, from where shares traded on April 17th, 2026, a 33.96% share return if shares hit their target price. That is amazing for the world's largest and most valuable company. And what's more incredible is that you can see there at the bottom left, the EPS chart, the earnings per share chart, an explosion over the past 5 years and a nearly doubling of EPS growth from 25 to 26, and an almost 40% increase in earnings per share growth through 26 to 27. That is amazing. This is trading, fundamentally, shares are trading very cheap, but you're looking at fundamentally, this company is growing like it's a small cap name with such large growth. And you see that, look at the sales growth there at the bottom right of 65.5% year over year, and a solid 10-year track record of sales growth as well. That is incredible. EBITDA is also having a 10-year trend, which these numbers are truly amazing for such a large company. Gross margins, now Nvidia is known as the margin king in the space. The gross margins of 71.1%, and net margins, which is phenomenal, at 55.6%. This is one of the most, if not the most, profitable company in the world, and they're able to corner the markets that they operate in. When you look at the trailing PE of 41.2, that is technically in overvaluation, but what we really truly care about is the forward PE, and at a 22.5 forward PE, this name, Nvidia, is trading like a value name with fundamentals growing exponentially. Now, the price to sales at 22.9 is a little worrisome, but the premium, I do believe, is warranted with the exceptional sales growth, revenue growth, gross margin growth, operating margin growth, and so forth over the past few years of Nvidia, but more importantly, the projected growth in these categories going forward. So that price to sales is indicating an overvaluation, but that premium, I do believe, is warranted. And you can see here from those analysts, like I mentioned, on average, there is a 33.96 upside on average for Nvidia shares, with the most bullish analyst indicating an almost 89% return. And I want to mention the biggest bear at a 30.49% decline. Shares a few weeks back, now we're in the middle of April, and the first 2 weeks of April has had a significant rally on the backs of geopolitical tensions easing, that is, peace talks potentially and a peace deal potentially coming through in the Middle East. But even the biggest bear at that time was not too far off from where shares were trading. And I do believe that that single bear at the $140 share price target that they have in place will need to revise that up as shares continue to rise. And I do want to mention, you see that big spike there, that solid blue line is the share price of Nvidia, and you do see a solid upside and swing really over the past month. And when you look at the valuation, I want to just point your attention to the forward PE at 22.5. Shares are actually trading very close to their 5-year low at 18.3, but well below their 5-year average on a forward PE basis, which is 36.9. So almost a 37 PE, and shares are trading at a 22.5 PE. And that was back in 2023 that shares traded at their 5-year high. I want to mention that at 57, my apologies, at 70.6, and the business fundamentally has grown a lot more in Nvidia, so you're getting a much better company at a lower valuation than you were 2 or 3 years back. Now, I want to mention here the valuation metrics relative to Nvidia's peers, which is Intel, Cisco, AMD, Hewlett Packard, and Arista Networks. You can see just on the forward PE, Nvidia shares are trading at the lowest. Cisco is trading a little bit lower. They're trading much lower than Intel, AMD, and Arista Networks. So now I want to mention here that Hewlett Packard, actually, the trailing PE is negative as they had negative earnings growth. The forward PE is at 10.4. Now, fundamentally, Nvidia is growing the most out of all these companies, yet is trading at the lowest multiple relative to the group. And I question investors which company you would want to own fundamentally. And personally, I would like to own Nvidia shares rather than Intel, which just recently, I want to point out to you that shares of Intel have actually finally hit their all-time high, which was set all the way back in 2000. So 26 years of no growth in shares if you bought at the peak of the dot-com bubble. That is quite scary and worrisome, which is why it is important that not only do we look at fundamentals of a company, but we look at the technicals so that we're not overpaying, even though a company has that solid fundamental growth. And you can see here the profitability of Nvidia is amazing and beats all of its peers on an operating margin, on a gross margin basis, a net margin basis, on a return on asset basis. So, which indicates that Nvidia is amazing allocators of capital so that they do get the highest return on their investments. And I want to just keep this chart up here for you guys to take a look at. But realistically, none of these companies in its peer group come close to Nvidia on a fundamental and operational basis. And you can see that here in the profitability as well. Gross margins on a 10-year trend, operating margins on a 10-year trend, net margins as well, return on assets, return on invested capital. Nvidia is one of the best allocators of capital to get a return on their investment. And they're one of the most efficient companies on an operational basis. And you can see that on the revenue per employee, the net income per employee, and you do see that 10-year trend, which is phenomenal. NVIDIA employees have the highest satisfaction rating when it comes to working for NVIDIA and any company. Now, here's a financial statement breakdown for NVIDIA, and you can see sales revenue growing on a 10-year trend, and all these numbers that you're seeing and values on this graph have an amazing 10-year trend. And you look at that 5 and 10-year compounded annual growth rate. In some categories, you see sales revenue over the past 5 years compounding at an annual growth rate of almost 67%, and 10-year at almost 46%, cost of goods sold at 60% and 40% in its 5 and 10-year respective values, gross income rising. You're seeing operating income rising. Look at that 5-year compounded annual growth rate on its operating income of 95.1 and 63.6 on the 10-year compounded annual growth rate. These are phenomenal numbers. You look at that net income over the past 5 years, 94.3%, on the 10-year at an almost 70% growth. EBITDA at almost a 90% 5-year compounded annual growth rate, and it's almost 61% 10-year compounded annual growth rate. These are phenomenal numbers for such a large company. You would think, if you didn't know that this was Nvidia shares, that possibly with this exceptional growth that we're having in the fundamentals of Nvidia, you would think that this is a small startup. But indeed, this is the world's most valuable company. Just amazing, guys. Wow. You really got to tip your hat to Jensen Huang and everyone in the NVIDIA management and middle management on the floor and everything. I believe every employee, and you can see that in that revenue and net income per employee that we showed in the previous snippets there, that every person has a role to play. And that's why you see such positivity and such happiness coming from NVIDIA employees. And I believe now it's important to take a look at, as we always do, at both bull and bear cases for NVIDIA. And I want to start with the road to $1 trillion of revenue. This is a huge milestone for management, which they have signaled a path forward towards this $1 trillion in cumulative data center revenue through 2027. That is phenomenal. Just to say $1 trillion of revenue, wow, this has never happened before in any company's history. This is just phenomenal. We're living through a time that we will look back on at a potential revolution for humanity with AI and so forth, and large language models hopefully being integrated more into our everyday lives. And this $1 trillion of revenue is fueled by the transition from Blackwell architecture to the newer Vera Rubin systems, which target a 10x revenue jump in AI inference. Yes, I did say that right. A 10x revenue jump. That is amazing. And I also want to mention the takeover of the market. CEO Jensen Huang has a strategy which now dominates the entire data center stack, which is dominating power delivery and liquid cooling to networking and software. By controlling the quote-unquote plumbing of AI, NVIDIA makes it difficult for customers to switch to cheaper hardware. And if you're able to essentially corner the market and corner your customers, that means increased stickiness, which inevitably leads to reoccurring revenues and wider margins and better bottom lines for the company, which translates to better returns for shareholders in the long run. And I want to mention that while NVIDIA has dominated the training side of AI, which is essentially just the building of AI, the bull case now highlights its lead in inference, which is the running of AI. So they helped and essentially dominated the building of AI, but inference, which is the running of AI, is the next growth stage of NVIDIA. And the recent licensing of Grok 3 LPX technology has allowed NVIDIA to solve the latency problem, making AI interactions feel near instant. So they have improved the technology over the past 5 years, which now means that there's a higher demand for NVIDIA products. And this is something that I want to mention other companies that we saw in previous videos, i.e., let's say Microsoft or even Amazon with its power capacity and supply constraints in the tritium chips. NVIDIA has actually secured massive allocations of chips on wafer, which is a higher bandwidth memory, effectively gatekeeping the physical ability of its competitors to scale up production, even if they have better designs. So NVIDIA looked at other of its competitors, which have and are still facing supply chain issues, which is affecting their underlying business. You look at the Microsoft Azure, where their supply chain constraints did shrink cloud margins. NVIDIA has essentially lock down their supply chain to ensure that you don't see a significant hit to the bottom line. Now, a problem that bulls will say is that the hyperscaling and the hyperscalers are insourcing a lot of their chips, which that is essentially making up over 50% of the data center revenue does come from Microsoft, Amazon, Google, and Meta. And we did see that Amazon is developing their own Trinium chips, which, let me say that they are aggressively developing their Trinium chips and deploying their own custom AI silicon to reduce dependency on NVIDIA and cut costs. This is not just Amazon, but this is also Google and other hyperscalers. You see that in Meta as well. And Meta is also branching off with different partnerships across various chip providers. And bears will argue that this will inevitably erode NVIDIA's pricing power that it currently has. And you can see that with the amazing margins of NVIDIA's underlying business. And if that's the case, that the hyperscalers are insourcing and developing a lot more of their chips, the market share that NVIDIA holds may erode. And you can already see that. And I want to mention that while absolute revenue is growing, NVIDIA's market share in AI accelerators is projected to slide from the 87% peak that it had in 2024 to roughly 75% by the end of 2026, as AMD and Amazon and its Trinium chips and so forth are developing and scaling at a high rate. And you can see as well geopolitical scrutiny across the board. In NVIDIA, there are multiple jurisdictions, not just in the US, but globally, that are looking at NVIDIA as a company and wondering if they have too much dominance in a single sector, which can lead to predatory pricing and so forth. And with yields rising, you did see the 10-year Treasury yield in the United States hitting almost 4.5%. As yields rise, that can take money from the stock market as a whole, as your risk-free return is greater. And if that's the case, high value names, now NVIDIA is not stretching any valuation possibly on their price of sales, but if yields continue to rise and we have geopolitical uncertainty and macroeconomic factors, NVIDIA may be one of the companies, bears argue, that will be caught up in the downturn. And you did see that in March of 2026 with the Iranian conflict. NVIDIA and all technology names were the hardest hit. I do want to thank you guys for making it to the end of the video. Please do hit the like and subscribe button. It does mean a lot to me. And stay tuned for the next video. Thank you very much, guys.